for it, and I'll hit what I hit earlier towards the end. But these are my daily order blocks. So when I framed this trade up last week, I figured my range was from this daily order block up here to the top. Okay, this was before we got any crazy news. I figured this pair would end up somewhere around this level, and I figured we can get a great sell-off at the beginning of the week. But we got that news Friday afternoon. And this pair dropped about 165 pips, to my great dismay. So I expect to see a retracement. Then I expect this thing to continue down. I'm going to mark up my golden zone. This is a 50% retracement. So this is what I expect to see. You know, ideally, I want this to come all the way to my order block, okay? I might not get that move all the way to the order block. But basically, I expect this pair to push down, especially if this war talk is not muted. Now, if for some reason they are able to avoid a war, then we'll have to reassess the analysis, okay? Because the only reason why the JPY is strong or gets strong is because of the uncertainty, okay? We were being driven by that Evergrande conundrum, where the Evergrande was $300 trillion in debt, and they seem to have come up with some sort of resolution. So the JPY started going up, and then we get the news of the war, and then now JPY is getting stronger, and all those pairs are going to push down. So I think that that pretty much all of them I think all of them were pushing. Let me make sure this is about the same level. We lost 140 in GJ. Same with NJ, CJ. Yeah, so pretty much all the JPY pairs look to be, we can look to take shorts. I'm personally not gonna look to short Chef JPY or USD JPY. And my reasoning behind it, I think they will fall, but they're also risk off currencies, right? We just talked about that. So the push down on these two currencies probably won't be as dramatic as the other JPY pairs, okay? Does everybody understand that? Just being aware of how these pairs move or what's moving the pairs will help you make your own decision. I'm not telling you not to trade these two currencies. I'm just telling you I'm not trading them. And the reason I'm not trading them is because I feel like it's more advantageous to me to trade the other ones that are going to fall more dramatically, okay? And I think for me personally, probably AJ and NJ are probably going to be my go-to pairs this week. And I think they're going to fall more dramatically. And they're not sitting inside all this garbage. This is a monthly order block. The pairs were trying to push through the monthly order block before we got this news. And now it's just going to muck it up, So I don't, people who know me know I don't like trying to trade. I don't like taking trades through order blocks. It's just not something that I'm willing to do. I think we will see these moves happen, but I choose the path of least resistance. Does anybody have any pairs they want to look at? Just type it in the chat. I know you guys are on mute. Does anybody want to break down a pair? Come on, y'all. Y'all scared? Oil, FRA 30, GN. All right, let's look at GAGN oil. All right, FRA 30. I don't normally trade this indice. Come on, it's not showing up on mine. FRA. FRA 40. They changed it. That's right. Jesus. I think every guys, I think every indice, if this war happens, I mean, you can short these indices. If you look at this is a short right here. Trying to give you a realistic range. Okay, you're going to get a retracement first. All right, you got this huge imbalance right here. I would anticipate the market coming to this imbalance. Filling that imbalance, that's right in the zone. So I would think the market would come fill this imbalance before pushing down if all things stay the same with this all this war talk. Now you're going to have to you're going to have to trade levels. I would definitely trade levels on indices. So what does that mean exactly? So if the market comes back up here and it pushes back down, I would take profit as it comes down. I wouldn't try to trade the indices all the way down to the bottom. I would take profit because the market is going to react as it goes down. So you're going to have to find your levels from your previous lows over here. And then you can trade the market down as it crosses these levels. Does that make sense? At the end of the day, this is still an indice. It's going to move the same way that our indices move. And this is just assuming that this war news is going to continue. Hopefully you guys have a good world news source like BBC or something like that, because a lot of times if you're waiting to get the news from one of these paid for Republican or Democratic news sources, that might not be what they're willing to talk about. Okay. Just understand that you need to be dialed in if you're trading these indices. I'm assuming whoever asked me this it either lives over there or they trade this often. GN and oil. Okay. GN. It's sitting at an order block. I'm definitely a swing trader. I'm gonna give it to you the way I see it. It's not necessarily for swing traders, but you're definitely going to get a swing trading perspective. Okay, so I expect GN to retrace to this level. And I expected GN to go up. But with all this war talk, the the British pound is a risky currency. So it is not a risk off currency. So a lot of times you're going to see the pound fumble, or drop. It is against the New Zealand dollar. So there is still hope that it will go up. I would still look for it to retrace here before it starts pushing up. I don't like the trading range on it, because once it gets here, it's only like 35 pips before it gets back into this order zone. It'll probably chop around in here. And then it has to go directly to another order block, a monthly order block. So, I mean, if you're a swing trader, at least I'm not interested in trading this right now. If you're if you like to scalp, or maybe get 50 or 60 pips at a time, then have at it. I think it's going to be a choppy ride as it tries to break through these order blocks, especially this monthly joint. It's kind of it's a thick area that needs to break through. I'm not saying that it can't do it, but just understand that with all the war talk, it might not happen as quickly, and that's the problem with us as traders. We want microwave results. So we might not get that microwave result that we expected. Now, honestly, I was looking for this thing to start pushing through last week. I think those of you who were on the call with me last week, this was one of our retracements. I thought that it would retrace, and then Tuesday or Wednesday we start breaking through this order block, and that didn't happen. So I don't really have reason to believe that it's going to shoot through there this week either, especially with the war news, and the British pound being a more risky currency. No, Essence, we don't want to look at UC. We don't want to look at the UC. UC is an unknown currency at this level too. I want y'all to Google these terms: risk off trading. UC is probably not a great trade this week, and here's why I say that. The dollar is a safe currency, or a quote unquote safe currency, but the Canadian economy, or the Canadian currency, moves on oil prices. So if the cost of oil goes up, then what you would want to see was the Canadian dollar get stronger, right? So you can't buy the dollar and buy the CAD probably this week. And what my chart tells me is UC should be going up. It was looking good. Are you going to buy this, Essence? I don't want you to get your heart broken. I know you took some everything you said you was gonna buy last week, you didn't buy it, and it went right up. All right, so my daily order block is here. It tapped in. This is what I like to see. I like to see the price tap in and push up. I think you'll get at least a 77 pip ride. Okay, looks like we might get another tap. There's your 100 pip move for Hey Sanders, mute your phone. All right, I think this is the exact move that we can expect. I think it'll push down. We get the retracement first, and then maybe a 120 pip move. That's not a bad move. If the this war thing continues, then I think that the CAD will we can expect all the CAD pairs to push up. Even GC. Right now, GC looks like it's going to go up, but if the war move happens, I think this is going to push down because I think the CAD is going to get stronger. No, Nia, we're not looking at GA. Okay, all GA is the same thing. It's supposed to go up. I don't know why I let y'all sucker me in these 4-hour charts. GA was a retracement move for us last week. For those of you who traded the easy money retracements. I expected this move also to go up. This is another GBP pair. Okay, so let me reiterate on the GBP pairs. Okay, GBP pairs should all be moving to the upside. All right, the fundamental reason why they should be moving to the upside is because they raise their interest rates. Okay, for those of you who don't know, that's what moves currency. Great Britain moved that they raised their interest rates on February 3rd. You should see all of those currency pairs moving to the upside. But because of this war news, we might have some delays, in that move to the upside. Overall, I was trading these pairs. I've been trading the GBP pairs up since December 16th when they raised their interest rate the first time. So overall, I've been expecting them to keep climbing. Okay, I've been expecting a continual climb to the upside, but because of the pending war or whatever, that might delay the movement to the upside. All right, they might get pushed back down a little bit. I think we all kind of have to wait and see, when the market opens, if there's any more news or, these other events. The first thing that has to happen for this GBP pair right here is it needs to break through this daily order block. So if you see this push and a rejection in this zone and it's not breaking through, then you can't trade this past, you can't take this long until it breaks through this order block. To me, if you're going to do anything, you're going to wait until it retraces. You can get in for this long, which is not very many pips, but some people don't mind taking this trade, especially if you're a scalper. That's about 90 pips. That's not bad. 90 pip. Maybe you get a 100 pip move out of that. Maybe I will reconsider taking that trade. But that's about as far as I'm willing to take this trade until I know what's going on in the world. Because with that war, with the pending war, I think that the move is going to be U.S. oil or even UK oil moving to the upside. I think oil is going to retrace. I've already put a fib on this. For those of you who don't know, I like to use a Fibonacci to plot where a retracement will go. So this move happened Friday. So I put a Fibonacci on this daily candle. If we get good price action, we'll get a wick that picks us up, taps us in this trade right around this level. Hopefully it comes all the way down to touch this wick and it doesn't leave an imbalance. That would mean we're getting in this trade. Then we could take oil to the upside. I put my take profit at $100. I mean, you don't have to do that, but I just put it there because that's where I've heard everybody saying that I heard everybody saying that oil should go. Okay. If you look at oil, it's in a pretty strong uptrend. Y'all know what situation we in here in the United States. So I don't think there's a reason why oil wouldn't make it, to $100 a barrel. Nice. Hey, my thoughts on every index is short. Okay. Is Remy here? Did Remy get on? Okay. Let's talk about these indices. Anytime you have a war, this is what you're going to see. This is exactly what we saw with the France. You're going to see it with the US 30. Same. So just understand how everything is affected. War is big business for oil. It's big business for like defense companies, Halliburton, Raytheon, but it's not good for economies in general, right? Like people panic, they don't want to spend money. That all hurts your indices. So any index you're trading during a war, initially, you have to sell it. If you try to buy during that war, you're going to get road graded right to the downside. So all you're going to do is draw your order blocks out. Probably you want to get you a 4-hour order block. In this case, I would just draw it right here, man. Nas US 30, same deal. I would plot the retracement on this 4-hour candle because it's going to retrace. There are people here that trade this a lot better than I do. All right, get with Dez, get with Demise, get with Will. But I would look for a retracement. Looks like we have plenty of we have an imbalance right here. So the market is probably going to come up and fill the imbalance, I'm sure. The imbalance is in this area. Then I would get my GAN box, plot 50% of it, and expect the market to at least come up here before it pushes down. In the Des, is your tutorial, is it in the education folder?
Yeah, I think the video is there. If not, I'll put it in again. But it works really well. That's all I have to say. It works really well.
Right. So If you want to trade, US 30, you want to trade NASDAQ, it's probably pushing to the downside, but there are people who trade it every day and who trade it a lot better than me. I don't trade it every day. But those strategies work, okay? Yeah, Remy is bullish bear. We had a great conversation Friday. I really wish he was on. He was supposed to come on and give his spiel about what it is he does and give an overview about options trading and that sort of thing. What I was doing is trying to convince Remy to open up a Forex account, because the information that he trades with would make him profitable in the Forex business too. Okay, Des, where's your folder? Is it educational or is it in the industry? Do you know? Let me see.
Okay, I unmute myself and you can hear me. I said, I don't know. Let me go check real quick and I'll be right back.
Okay, appreciate it. All right, we'll get you that info. Hey, while everybody's at a pause, I want to take time to thank the admin, Des, Alicia, Brianna, Tanisha. Without them, we wouldn't have a community. Okay, sometimes you need friends, and you need friends that think differently than you think. Right? We were meeting on WhatsApp, and somebody suggested just starting a Discord, and it's probably the best idea that I've never had. And regardless of what you think as a person, sometimes having the right friends will take you places that you didn't think that you'd ever go or whatever. So, I'd like to thank those ladies for making this happen and giving us an environment that I've wanted, I guess from day one. The whole reason that I even started meeting as a group or doing things as a group. Thanks, Des. Des dropped the information in the chat. The only reason I started doing this as a group is because, as a trader, man, you go through so much, emotionally and psychologically that you need a network, man. You need some friends. So, this community will hopefully provide us with a support system that will allow us to bounce ideas off of and also keep us sane, especially when we go through our little struggles. And everybody's going to go through struggles. But just lean on each other and hopefully we can preach support, instead of being at each other's throats. I appreciate everybody and what they bring to the community. What I don't want though is I don't want to be the only one talking. There are a lot of people in the community who come with a lot of different experiences. So please share your experiences. Even if you're not comfortable talking on a Zoom like this, I understand that, but share your experiences through news feeds or through reaching out to people individually. If you see somebody struggling and you feel like you can help them, reach out to them. But just understand that we all started somewhere, right? None of us are where we're at because we didn't keep trying. We're where we're at because we kept trying, and none of us, hopefully, are in our final place, right? Hopefully, we'll all continue to progress, as traders and as individuals. Do I have any other pairs that we want to look at? Okay, so I'm going to basically recap what I said at the first of the video because I wasn't recording. All right, about the profit section. Okay, the profit section was a struggle for me because people tend to look at the profit section and they see people making a lot of money, and they feel like they can automatically duplicate that success if they just take the same trades or they take that person's trade ideas, and it doesn't work like that. Okay, those people have been through the ringer. They trade maybe a little bit differently than you do. Their psychology is in a different spot. Maybe they hedge, maybe they don't. Maybe they can hold a trade longer than you. You're not going to get the same results just because you take the same trades. Maybe they can manage the trade. Maybe they take partials. Maybe you don't. Maybe you take partials. Maybe they don't. So they're going to make more money than you. Please understand that that section doesn't mean that if you take those same trades that you're going to be an instant success story, because that's not the way it works. You have to go through the ringer. You got to get road graded. You have to decide for yourself that you're going to change. You have to change as a person. If you don't change who you are as a person, you'll never be able to make money, not from the market, because it requires you to change. It requires you to drive the speed limit. It requires you to obey your risk management. It requires you to obey your trading plan. So just understand that when you look at the profit section. Overtrading is hurting you. How many trades are you taking per week? Are you consistently taking that many trades? Do you pick your trades out before the week starts? All this stuff is hurting to your success. The more trades you take, I'm willing to say the less successful you'll probably be. Now, if you're a seasoned trader and you found success, then maybe you can take a few more trades. But generally speaking, if you're a new trader, the more trades you take, the more you're going to get beat up, the more you're going to lose. So stop over trading. And if your trading plan doesn't address you over trading, you need to redo your trading plan. And if you just can't stop trading, man, that's what demos are for. Take those trades. Take 100 trades in your demo. Just pick the 3 or 4 you're going to take for real and take those trades and see how your week goes. All right. Trading environment. This is huge because the environment changes every day. And even if you're a swing trader like myself, you have to realize that in today's market, because it's a risk-off environment, I may not be able to swing. I may not be able to get a 200 pip move this week. I'm hoping that I can, but maybe that's not possible because of the war talk. Maybe they'll say we're going to war one day, or in this 8 hours, and then 8 hours later they might say, oh, we've averted the war. Everything is going to change. Okay, so make sure that all of this stuff is in your mind when you plot these trades out, or when you pick the trades that you're taking this week, or you're picking the trades that you're taking, on a 4-hour time frame. Because a 4-hour time frame, sometimes it'll take a little over a day for it to play out. If you're taking a trade based on the fact that Russia is going to invade Ukraine, and then they call it off, that trade might turn around. So, plot your day, or plot your trades around what you're doing. Make sure you keep that in the back of your mind. All I did was Google risk-off environment, risk-on environment. I've known this for a while. I think the people that were in the group with me previously, they've heard all this information before. They've heard about the JPY during times of uncertainty. All I did was Google it, because I wanted to give you guys a reference. I put this in, I think, an education folder or whatever. But this stuff doesn't change. Whenever you see the VIX, the volatility index high, I think you're going to see a sell-off, in the indices. I think that goes hand in hand. Don't take my word for it. Go back and look. When the VIX is high, the market's going to cook. They're going to cook off. And when the risk off, or when there's a risk off environment, those JPY pairs are going to cook because of the uncertainty, and people run into the Japanese yen. I don't think all of you guys are familiar with ICT. ICT has influenced the way I trade, or the way I look at things. So for those of you who don't know, we should all take our cues, like our currency cues based off the interest rates. Okay. Whenever we have high interest rates or high inflation, we should expect the currencies to go to the upside. All right. When we don't get that, we need to start doing research on why. Okay. There's a reason why. So when we got that dollar news and the dollar did not go to the upside, you got to go do some research. Okay. Don't just keep trading or getting these trades and you say, oh, I know I expect it to go up or whatever. The market maker is playing. All that is cute, but make sure you go and do your research, because there is something else that's going on. Okay. So for those of you who don't have the site, it's www.global-rates.com. www.global-rates.com. This page right here, where it says central banks, this will give you all the interest rates for all the currencies. Okay. And you can sort this by the last time they had a change, right? And you can see Russia raised their interest rates, Mexico, Poland, the Great British Pound. So I'm not interested in the countries that I don't trade, right? Like if I don't trade the Russian ruble or whatever they have, I don't really care about them raising their rates. But the currency pairs that I do trade, the British pound, the Swiss franc, the US dollar, I want to know when they're raising interest rates, because when they raise these rates, we should see an uptick in the market in those currencies. And what you can do is you can pair this currency, the British pound, with a currency that has a crappy interest rate, right? Like the JPY, right? So if the British pound raises their interest rate and the JPY has a negative interest rate still, you see it down here, it's a negative 0.1. So we should see that soar. The Swiss franc is negative 0.75. So we should see the British pound go straight up against those two currencies. When that doesn't happen, we need to be asking questions. We need to be doing the research behind why these currency pairs are falling around. Like there's no reason why this should be turning around, right? So you have to understand that the environment has everything to do with why your currency pairs are not performing the way that they should be performing, or that you would expect them to perform. So you can find that information out, by probably doing a couple of Google searches, or just asking questions. Now that we have all these sections and these people, please use bearish bull, bullish bear, because that guy is dialed in. Okay. And everything that affects his market affects our market. Okay. All this stuff is intertwined. And when he's spewing out that news, he's basically helping you out as a trader. That stuff should perk your ears up. When you hear stuff like war, or VIX, the VIX index is high, you should be selling indices. All right. Hey, Sean. Hey, Sean. You got to unmute your mic. Or maybe he's not there. Well, I know that I want to say when the VIX is over 20, then that's considered high. But don't quote me on that. Whenever we need bearish bull and bullish bear, or my brother, they know that VIX better than I do. But I think at 20 it's considered high. I think the VIX was like at 27 on Friday. So yes, high interest rates. All right, let me break this interest rate thing down. Okay, and before I break it down, let me tell you where you can hear it from the man himself. If you look at the Market Maker series, I believe it's the second video. Is it the second video or the first video? I know Tanisha knows. I know a couple of people have seen this. I think it's the second video in the Market Maker series, ICT Market Maker series. You can find that in the education tab. But he explains that the currency market itself, if you're a currency trader, the fundamental driver of your market are interest rates, okay? Interest rates is what makes your currency valuable, okay? Because a higher interest rate means that people can put their money into that currency and get a bigger return, okay? You would be if you had a bank that you can drop your paycheck in and you can get a 12% interest rate, you're going to go to that bank and you're going to drop your paycheck off. You're not going to drop your paycheck off in a bank that's not giving you a high interest rate. It's the same with currencies. So that's all that is. So you have to match your interest rate. You have to match your interest rate or your currency's interest rate against a country whose interest rate is a lot less. Okay, and what I would tell you off of my personal time doing this, or my personal knowledge of this, is right now the Swiss franc and the Japanese currency are the worst interest rates. Okay, so whenever a currency rate hike, whenever a country has a currency rate hike, you can buy that currency against one of those two, and you're probably going to get a pretty big push. Okay, so that's in general what moves the market. So if there is nothing else going on in the market, then you can base your trade ideas and your trade scenarios on those interest rates, right? But every now and then, like now, Friday, we have something else that came into the market, an impending war that changes the environment. So the countries with those weaker interest rates, their currency becomes a lot more valuable because it's not as risky as some of those other countries. So you have to adjust your mentality when it comes to trading, and you're going to have to take it slower. You know, maybe you'll dial down your lot size. Maybe you'll be more cautious. Maybe you'll get two or three confirmations before you enter the trade. Whatever that means to you, I'm just telling you, you can't hop into these trades like it's another Monday. It's not another Monday. It's not another Sunday. This is a different environment. All I'm telling you is to exercise caution when you're going into these situations. Okay. Hey, Chase, just hit me up. And we'll do a one-on-one about that, about the funded challenge or whatnot. But there's another.
Okay, thank you. I appreciate it. I really do.
No problem. There's another website that you guys should be aware of. It allows you to see like the current bank positions. Okay. But just look at the ICT Market Maker series, okay? These ladies put a lot into building this site, okay? I know there's a lot of information, but if I can give you some advice, that advice would be, to watch watch ICT Went series, what every new trader needs to know. Watch ICT Market Maker series. Go through these tutorials. Kelly dropped this master class on scalping. It's very detailed, right? It's kind of in-depth, it's kind of wordy, it's long, but it's worth you researching the information if that's something that you want to do. You can't avoid doing the work, guys. Like, this work is so important to you developing into the trader that you're going to be, because those of us who have found some level of success, we had to put in the same work, right? So put in the work. Maybe you'll get, that breakthrough you need because somebody else says something that's a little bit different. It hits a little bit differently than the way you've heard it the first time. And maybe that's the catalyst that boosts your trading. So please go through these references that these ladies have put like countless hours into making sure that they're posted. These references are only going to help you as a trader. I'm just trying to give you a big picture view of the thought process going into this week of trading, okay? And what that thought process is there's uncertainty. It's a lot of uncertainty out there. There's not a trader here who will be able to tell you that for sure the market is going to do this, because nobody knows. Nobody knows what Russia's really going to do. Nobody knows where the oil prices are going to go. Nobody knows why the dollar didn't rise when we had record inflation. Nobody knows. All these things are mysterious, and there's uncertainty out there. So you should be cautious. You should have a level of uncertainty to you too. That's just good sense. It's good awareness, and it's not that you can't make money this week, but it's not that you can't make money, but you're gonna have to find maybe safer ways or more protected ways for you to enter your positions. Okay, if the JPY sinks, we can all make money. If they sell off like I think they're going to sell off AUD JPY, NZD JPY, I will take full advantage of that. But if not, then I'm going to have to try to adjust my strategy as well going into this week. Do I have any other questions? Maybe if you guys are trading indices and you're selling them, you'll probably make plenty of money. I got one person with a hand up.
Yes, that's me, Denise. I have a question. So do you have any idea as to why gold bought up so high yesterday?
Well, yeah, because that war situation. I don't know if that's going to continue, but gold is something that you can't fake. Like you can just print dollars. You can't just print gold. So when you have these environments like this, that's people sunk their money in something they know is real.
Okay. So I'm not a big person to use stop losses.
Ooh.
But based on this information, I think it would be wise for everyone to make sure that they're using stop losses right now.
Denise, I hope everybody always uses stop loss.
Yeah. I'm encouraging that, definitely.
Yeah, Denise, some stuff you don't say out loud.
Yeah.
If you trade without a stop loss, I mean, ooh, no new person should ever trade without a stop loss.
Right.
Or a hedge trade. Like I use a stop loss maybe day 2 when I'm already in profit. But you have to protect yourself in a trade. And that works for you, Denise. I know you found some success. If that works for you, that worked for you. But if you're a newer person, please use a stop loss.
Please use a stop loss if you're new, for sure. I mean, I think for me, like I still do use a stop loss. Most of the time, it's just my stop loss is a lot wider than maybe the average person.
Right. I know.
I'm just a little bit more of a risk taker than
Right.
some people, but yeah, definitely use it, especially in the current environment that we're in with this uncertainty for sure.
Yeah. And me and you talk, I know what you mean, Denise. I mean, I got it. I'm just saying, because we got people on here that may take that and run with it. So please use a stop loss.
Please use a stop loss. It's your mama trying to save you for sure.
Do I have anybody that has anything else? It's been about an hour and 15 minutes. I try to keep this around the hour mark. I know we're a bigger group, so maybe we'll get a second Zoom going. But I want to get with Remy because maybe he can record his stuff and we can just post it. But he was supposed to give us a block on the options. But a lot of his information, from talking to him on Friday, we saw eye to eye on a lot of that stuff, especially with the risky environment that we're in. But if you guys don't have anything else for me, I will I'll end this Zoom. And if you guys need something else, hit me up for a one-on-one, and I'll see if I can get you or point you in the right direction, or get you to the right people, so that they can help you achieve whatever it is that you're trying to achieve. So thank you guys for showing up, and we'll talk later on in the week.
Thank you. Bye-bye.
Later.
Bye.
Bye.